Hello investors and traders, today we'll speak about the main US indexes, S&P, Nasdaq, TLT and the current situation in US economy. So as a tradition, let's start with the S&P 500, the main index of US. In my mind, yeah, it was here, the wave A finish. Now we have a bounce, we see the AFB here, the target is about 4 thousands, and then maybe after this we'll see another move down. It will be wave C, but most probably it will be the next year. So now still I'm expecting bounce. Here it was expanding, leading diagonal, the first wave, the second, the third, the fourth and the fifth. Going forward to the Nasdaq, we can see that current level about 11,000. Here there is a nice level. It's about 97.58. So it's the pre-pandemic level. So I think the index should go to this level. It's about another 10% down in this case. What can be the reasons? No, it can be further interest hikes by the US, or maybe some bad reports of the companies, on maybe such companies like Amazon or Apple. I heard Apple now has a lot of problems. So maybe if Apple will go down another 10-15%, it may cause the indexes also to slow down. And the main reason, of course, why it's such a tough year for the stock market, for the indexes, is Federal Reserve Fund. It's a daily chart. We can see that very aggressive the tightening by the Fed. So it was about 0% at the beginning of the year, then it was percent 2, and now it's about 4%. The effective federal fund rate is 3.83. So very fast tightening, and now we at the level at 2007. So anyway, the mortgage rates, all the loans rates are related to the effective Fed funds. So it's a real issue for the market, for the stock market especially. So until the Fed won't come down, I think the stock market is not going to start to perform and show a nice performance. If we look at the US government bond, the 10-year treasury bond is 4.2. So 4.2, it's very high. No, of course, because the inflation now in US is 8.2% year over year. So still very fine inflation. Don't forget, it's in dollars. So 8% in dollars. It's a real very high inflation in my mind. So the 10-year treasury bond is even higher than the 10-year treasury, is 4.7. So the previous time we saw such high 2-year treasury bond was about 15 years ago. It was the financial crisis. We still see that it's inverted the yield curve. So the risk in the near term is higher than the long run. So in my mind, we are in a recession. Nobody wants to buy the 1-year bonds, the 2-year bonds, because everybody understands the risks. So most probably now we are in a recession. And the TLT, of course, the ETF on the treasury bond, now it's a very tough year for them. About the performance from the beginning of the year is down 35%, but it's one of the most safest securities in the whole market in my mind. So I think it's the TLT. Don't forget the sticker. I think it can be the best investment idea for the next year. I think I will prepare a separate video about TLT, about treasuries, about bonds. If you want, please write in the comments. If you're really interested in the bond market, so I can really make another separate video about this topic. So I think it can be very useful for you. So the TLT, yeah, I have started to buy it for a small portion of my portfolio, but I think now, by the way, this is here the major support level is 92, so I don't see. No, of course it can be. You will see the treasury bond yield 5%, 6%, but in this case the inflation is supposed to be above 10. It's I think it's not the main scenario. So anyway, we'll see. So related to the stocks market, I think is all. Now it's the end of the year is closer and closer, and there is a high probability to see the Santa rally. Usually it's in December, the second part of December. So we'll see how it will be traded. So if you like this video, don't forget to subscribe, press the like button. I have a lot of videos about stock market, dividends, fundamental and technical analysis, and see you on the next time. Bye.